Yeah, I won't comment too much on the general market, but we are having a pretty decent pullback here in the Russell, down 3%. So, and just again, this is where if you follow the setups we've been talking about, the risk models on red. You shouldn't have gotten yourself in any real serious trouble here. So, keep the powder dry for now. I think this is gonna shake out into possibly a good opportunity for us. And even as Marcus said, the Fed pretty much signaled that we're going to be cutting rates in September, but he's also warned that, be careful, once that's already priced in, maybe that, it's a sell the news event. Well, we're seeing that at least in the short term for now. So, but we're going to go for a solid hour here, try and get through as many of your guys' questions as possible. So first one was on GE, asking, just sort of going over his actual trade, bought on 710 right here. Didn't have a cushion for earnings, so sold half on 716, which is right. I don't know why you would sell there prior to the earnings. Or maybe you meant over here on the 22. Oh, sold and the rest on the day of earnings got back in on a tightening, I think, bought at 173.05, buying a 5% position. I think you were talking about maybe then re-entering up here. Look, this is as far as your original buy, I think is good. It's very good. I think this is a tight little pivot. Did we buy this on the platform or were we just flagging? This was on Focus for quite some time, and then we were buying it sort of, even the pullback on the day of the earnings. Double checking that, and obviously it's held up really well, even in a really bad tape, still holding up well, and one of the few remaining longs that we have. I think it's been a little tricky to get on board, but this is the environment we've been in. So I think your tactics are fine.
Yeah, we bought at 7.9 and we stopped out, I think 7.12.
That's right. Okay. Right, so we were highlighting it, a day ahead, and then just took the really tight loss here. But this is where your reentry mechanism. So Mark decided, okay, he bought the pullback back to sort of this pivot here, on the earnings. So far, again, holding really well. This is the type of name, even if maybe we get shaken out of this name, I'd look for this to build out and reset just because it's held up really well against the market. Question on Block. Block on 711. Yeah, right here. This is a name. This is a breakout I wanted to buy as well. I held off and then of course regretted it. Now it's giving back the whole move. De-risk tap on 716. Great. So you sold into this, this breakout here. It's looking weak, but would you sell it or keep holding until the back half stops you out? In a situation like this, I would have, after de-risking into this gap, I probably would have moved my stop to even. So I probably would have already been stopped out on this day. At this point, you probably stopped out today. So look, this is where you again, you use that backstop calculator we just added to the platform and kind of just ask yourself, what kind of holder are you and how much room do you want to give it? This pullback is a little too excessive for me. But if you're trying to play it for a bigger move, I still think you de-risked it in such a way where even if you use your original stop, your net was still a gain on the trade. So all in all, the pullback might have been a little excessive. You didn't lose any principal. Another question: do you ever consider insider selling or company offerings when determining whether or not to enter a VCP? For example, if you see the company has filed an S1 and has high likelihood of dumping it in the market, would it deter you from entering? Two recent examples that come to mind are Bros and Kava. Well, the short answer is, look, we don't use insider buying and selling as a part of our regular screening criteria. And so the short answer is, if it's a tight VCP, Bros and Kava, I don't think had one. So in my mind, it wasn't an issue because they never had a tight VCP. Now with newer issues, there definitely are times, secondaries and things like that. Look, generally speaking, that's not ideal. We often look at how does the secondary say absorbed, when the company's offering more stock. But that does tend to take the starch out of a move. But I would say, all things being equal, if we see insider, transactions, we prefer to see buying or a lot of stock that's held by insiders, but it's not going to I'm not going to shy away from really good VCP, regardless of what the insiders are doing. And keep in mind, if the trade just doesn't work out, we just stop out and move on. So that happens a lot. Question for you specifically, Brandon. Yesterday, Brandon mentioned that when entering BURL trade, from Minervini Select, you mentioned you weren't going to risk, say, the full 6%. How does that work? Do you set a stop at 6% and then wait until the end of the day, and depending on how the day's close and market action, you decide you'll reduce, or do you have a hard stop, say, set it, for example, 2%, you've already decided before the trade? Could you elaborate on your stop placement when you're trading tight?
Okay, so that was in regards to DOYU, not Burlington. So if I said Burlington, I meant DOYU. And listen, this is, in this situation, when we were looking at this, given the setup, and what was going on in the market, we just basically said like, hey, if this comes out, and gets going, we don't want to let this dig back into our pocket too much by the, taking a 6% full stop. So how could we, incrementally adjust the stops to get out where maybe the average is a lot less than 6%, and that's where we kind of watched it really close. And this is where obviously having the experience to know what you want to see or what you want to expect to see, and when you don't see that, you step aside quickly, because listen, we didn't want to sit through what DOYU ended up doing, so we got out a little bit earlier.
And on the, this was one of these where we kind of thought it would get going. And then once it got going, even that day, if it had put in an outside day, we probably would have punted the whole position.
Right.
And the next day we were thinking, all right, we might get an undercut because there'll be other people doing the same thing, and we'll see how we close. It didn't close very well, so we sold half on the close. We're just being incremental. And again, gauging that price action. And, the worse it's going, the tighter we're going to be.
And that's exactly how we handle it.
And look, if I was a really short-term trader, as I mentioned yesterday, or we're trying to, do the MST, in more swing fashion, you could have de-risked a part of this into this initial move. You'd use low of the day, as your sort of stop, which doesn't go, you could have peeled off a piece of your position. And some really quick traders might have done that. Obviously that's not how we're looking to trade these positions.
Well, and I think too, like Marky and I talked about the close on the day of the breakout. It wasn't that strong. Now it was okay, but again, given what we were seeing in the market, we just did not want to give this too much room to dig into our pocket.
Thomas is asking, when your account was smaller, 5 or 6 figures, were you trading as aggressively as these USIC contestants using 50 to 100% position sizes? If yes, when did you stop? If no, why not? Yeah, the short answer, first of all, Thomas, is I don't know exactly how aggressive all these different USIC guys and gals are trading, but yes, you're right. They're trading sometimes very aggressive, or putting all their account, maybe even one name. I've never traded that aggressively. And even the biggest I probably ever, maybe there were some times I might have put half the account in a name. But that was, could count it on one hand, maybe. As a general rule, I haven't traded bigger than, say, 30%, ish positions, in terms of percentage of the overall portfolio. And the reason why not is because, one, I don't think it's necessary. Two, I'm not personally comfortable. And 3, I've always, been managing a little bit of sort of family money. I don't think you can responsibly manage other people don't have that kind of risk tolerance. Yeah. Were there times I could have been more aggressive? Yeah, absolutely. But those are just things you have to manage. And listen, there are people who put their entire account, 2 times margin in one name. You just, again, that is only for professionals, in my opinion, and people who really understand liquidity and know what they're doing, and for the best of times. But I'll just say too, I don't think it's necessary to trade that aggressively to get really good performance.
Okay.
And listen, if you're going to do 500% performance, like on some of these small accounts, that is, you just run that on a compounding calculator. You'll own the world. Right. Like, that's not sustainable when the numbers get large. But there's nothing wrong with that. It's, again, assuming that you know what you're doing, and things are really working well, you can definitely be aggressive. Jeff is asking, when you purchased DOYU, what would have been? Oh, we sort of covered that. would you wait for the platform's maximum stop? Because that would have been the biggest loss yet on the intermediate select. Well, we talked about how we're handling. We're just expecting this. And look, if there's any critique we could have made, you know, say on the MST at this point, is maybe we just been a little too aggressive in terms of going back to the well and names, but we're doing it on really tight risk. So we're thinking if this thing takes off here, we're in it. It didn't work, and we got right out.
I mean, again, look at the results. We're down, what, 3.5% on that account? I mean, we're sitting just fine.
Nothing is working.
Right.
Like,
We're in good shape.
in terms of the actual trade results, they look really poor. And if you told someone, "No, I haven't had a winning trade, I'm only down 4%," you'd say, "Oh, I think I'll take that." Follow-up question on AGX and Urban. Would yesterday's 731 have been considered good entries for both stocks? Definitely yesterday, you know, was a pivot. And did we not have, you know, we had thought about highlighting as we were watching this. You know, just the overall action focus has not been very good. So you're just noticing there's less names and even less highlights. Obviously, this is coming in with the market and getting hit hard today. But yeah, in a good market, you absolutely could have and potentially should have been playing or adding to the name. As far as oh, sorry, Urban, not Burlington. Yeah, I don't like this pivot near as much. But yeah, this one's on focus because, you know, you've got this, you know, decent sized base here that came out and sort of pulling back to the top of this breakout. And you kind of have a weekly pullback by here. Now it's sort of it's engulfing, and, you know, the right side looks kind of messy. You know, look, this is aggressive. But if you measure, you know, even down to here, it's acceptable. Eric's saying, I'm sure you expected this question. Since you posted on Twitter, what's the thought behind holding a piece of Bitcoin nearly down 27% from the top? Well, I've already financed it. So that's the thought is we've paid for that with the original buy and are only holding basically a quarter. So yeah, that's even less than a quarter what we originally bought. It's a small position. Mike Webster in a recent interview also mentioned he couldn't do it, but Anil would used to hold through 30% basis, obviously only holding a piece like you are. Is it because it's Bitcoin that you're willing to do this, or would you do it for stock too? Occasionally will. And listen, this is occasionally also where some of our bigger drawdowns have come from, because yeah, you finance those pieces, but those still will move against your P&L. So yeah, on occasion, if there's something that, you know, we like the earnings, you know, we're trying to play it for a bigger move, but we're always going to finance it up front, Eric. So that's sort of the key. We're not going to just, you know, take it on the head or take it on the chin, you know, as something is moving against us. And look, I'm fundamentally bullish on Bitcoin, but, you know, if it hits our stop, we're out, you know, in the remaining piece. And as I said, you know, we're going to get things wrong all the time. But, you know, we liked the original entry. I still even think this base, if we can get a right-hand side here, I would jump right back in and look to add back. You know, if we can get some type of a handle or pivot here. Sorry, guys, we get landscapers outside our window now today. If you were on yesterday's call, that should pass here in a moment. Let's see. Mike is saying I bought MPWR on June 10th. June 10th, sorry. Good right here. Yeah, a good little pivot there. It was acting fine for the big drop through the 20-day on in mid-July. I had bumped by stop to break even, so I still own it when it crossed below, and I waited 30 seconds. It rallied through the day. So I'm guessing maybe you're saying it opened on this day just through your stop, but you gave it a second or 30 seconds in this case. Question is, since the price action is abnormal, even though it hasn't hit my stop, when in here, should I take the position and gain and just move on? I'm not 100% sure that I understand what you're saying, but look, as a general rule, okay, let's say it hits a stop. And this would, the only time I would ever do this, and I want to be really clear on this, we don't ever not stop something out. So if we say, you know, let's say your stop was, you know, right, I don't know, right here. And the stock is opening either just below that level. But not a lot of volume is trading or that type of thing. And you want to give it a second to see if it bounces. And this, or maybe it opened right here on the lows of this day. It's okay to give it that period of time, but our rule is we're out. If maybe it snaps back violently and you go, okay, I'm gonna then change to this stop and it's a 0.5% or something like that. I mean, I've done that a few times in thousands of trades. The key is don't override stops. So if that's what you're asking, like, hey, if it opens near a stop and I give it a few seconds to kind of see, does the market quickly find support here? I think that's okay. I also think that's more of a professional tactic. So if you're new, I would just get out. And as a general rule, if the market lets me out at a better price than I plan to get out, I take the money and run. I take the gift, if you will.
Yeah, you just don't want that to expand to beyond what you said you were gonna allow, and that's where I think it can become a slippery slope if you're not disciplined.
Mike's saying about a quarter position of DO on July 10th. I guess that's right here. Yep, so you bought this little pivot. Can you evaluate this? And in this market, I'm tempted to cut some before stops if the price action is bad. So should I take half off of the bad price action today? Well, listen, you got to follow your plan. At this point, in this type of environment, yeah, look, everything is kind of coming in and or failing, and we're seeing volatility widen on the right-hand side. I certainly would be, if you're not tight, I would be tightening. And you've got them, looks like at 1570 and 1525. I think that's fine. You're staggering the two. I've certainly would probably be cutting some here. And maybe this is where you just go, okay, take some type of a dollar break even. So nothing gained, nothing lost, and then move on. But again, when things are not working is when we want to get tighter. So I like that that's what you're thinking about it. Robbie's saying, sorry, I keep asking about the extended and compressed right side this week. Half my confusion got cleared up when Mark Minervini went over Burlington yesterday. However, that caused a new question. How is it that right side different from Garmin, BLD, and ALSN? Are these three right sides extended and compressed? If so, can you please draw in what you need to see for all three stocks? I was looking when price moves up from 710 and consolidates. Yeah, Garmin's one I saw. Yeah, sometimes compressed just means short. Like the shorter the right side, there's often a price to pay for that. We're seeing that here with Garmin. It doesn't mean you can't play these, but this is where environment really matters. Are short right sides working? Have you seen any short right sides working? I'm saying just in general. Lately, obviously the answer is no. And in a really good market, these will work. But lately, they're not working at all. So would you rather prefer something short or something more developed? I mean, we can look at these other ones. Right, these are all, sort of 1-2 week right sides. This one came out nicely. Now it's pulling back. Again, there's a price to pay for that. The stock hasn't had enough time to weed out any of that supply at these levels. I thought the goal was to try and get on board the stock at different levels, or did I misinterpret the concept? And the whole point is to get on at different levels while the stock is slowly rising on the right side, not shooting up, then consolidating to show the volatility is contracting. Yeah, I think you're thinking about it right. It's exactly right. There hasn't been enough towel ringing. If you've used, heard Mark use that analogy, if you come to the Master Trader program at these levels. Again, it doesn't mean it can't work. And sometimes the strongest names, that might be all they give you, which is why gauging the environment. How many times you guys hear us say, well, it depends on how things are going. That's because the market's very dynamic. It's not static or the same all the time. But Costas is saying he bought CDLR yesterday. Thoughts on the trade? Yeah, this is one I haven't seen. I don't love it, but look, it's pretty tight here. Percentage wise, it's acceptable. It's a little short. Yeah, I mean, obviously fundamentals are terrible, newer issue. So
It's pretty thin too.
and it's a thinner trader. So, I would, all in all, I'd probably, and given the environment, I'd probably give it like a D+ or a C-. It's not the worst setup I've seen. Also thoughts on Palantirs is becoming viable. Um. No, not right now. Look, you're pulling back to this base. If we could get, this pullback, just 15%ish. Yeah, we just need more right side development. Could you get some type of a cheat here? Yeah. But right now look, we're playing defense mode. Nothing's working. We're not seeing very many setups. Now it looks like we're coming under some distribution today. I'm not thinking buying. I'm thinking, pull in the horns and what, leftovers we have, trying to tighten things up. Gabby's saying, apart from good buys and good risk management, what do you think NPA, USAC top performers are doing differently? How can they achieve triple digit returns in a year where intervening? Well, one, they're shorter term trading, like we said. But again, in different, I'm amazed at, I've been around doing this a long time. And even in good markets, you hear of people that are struggling and other people are doing well, or what seem like good markets to me. So that, there's a large degree of human element and style in this. If you're a really short-term trader, hey, there's been plenty of breakouts and things to trade. And I'm, look, the other thing is different account sizes and aggressive, or how aggressive people can be. Let's see, Lance is saying, was GE Bible today? And we just talked about GE, right now. And I would not be buying this today. Did it even clear?
I might have poked its head out, but
It didn't even clear the high from a few days
it
ago.
didn't.
So yeah, it's sort of working inside of, this range. Could you have bought it through yesterday's little, inside day and been really tight on it? Yeah, I guess, but on a name like GE, I wouldn't play it that way. So yeah, I would just wait and see if this can continue to stay tight here. Then Tobias is asking about GRND. What do I think? Yeah, it's trying to kind of set up a low cheat here. Pulling back to this breakout. This isn't one that's on my immediate radar. Oh, this is Grinder. Okay. Just looking at, I think I've seen this symbol before. Yeah, look, if this can tighten up here, I think you could potentially play it. Yeah, I mean, this is definitely tight enough to be a playable low cheat, but as I said, the environment just, things aren't really working here, so I would keep positions light till you see any traction. George is saying, what qualifies as a low cheat? For example, what's the maximum drawdown from peak to trough, and how many days should it be at least? Also, when taking trades in the intervening, select wire stops not posted directly, but rather after the trade is closed. Well, answer the second question first. One is sometimes we have staggered stops and we're moving the stops. We're trading it more like people be trading, say an aggressive in their own portfolio, engaging the price action in real time. Plus we, like we've said, the whole point is not to have everyone mimicking and robotically following, but to give real color and ideas of how does one use progressive exposure and trade around, these type of positions, because that's what everybody's been asking for. It's funny, people want some type of model portfolio, then we start doing it, and they want it done differently. You can't make everybody 100% happy all the time. We're doing the best we can there. What qualifies as a low cheat, is look, what's in the bottom third of the base we consider a low cheat. The mid third is a cheat, and the upper third is a handle, because we use that vernacular. As far as percentages, though, that's just where, look, the bigger the base, the more or deeper the base, the more likely we are not to even consider it, which is why we don't generally trade these low cheats, where there's tons of overhead supply, meaning that, where the pullback is 30, 40, 50%. Those are usually bases we're going to avoid. Giancarlo saying, thanks for taking the question, bought PLMR on February 15th. I'm wondering if that was a good decision. February 15th. Okay, so we got to go back over here, right here. So just looking at this, if I'm seeing this correctly, I mean, looks like you just chased gap. Could you please explain in what situations you would avoid buying a stock with a gap? This situation would be one of them. Also, how would you set stop losses and handle partial sales in this example if you had bought it? Well, I can't really say, let's say I had bought this, properly, and there wasn't really a right side even here that I probably would have bought. Maybe let's just say I bought it through here, you got the earnings and you got this gap. So talking about that part first, I probably would have de-risked a portion here. Then if I was going to play this for a bigger move, I would have either switched over to some type of 50-day trail or looking for when it gets very extended on something like Model Alert, where you can do, backstop big move plus extended. It's easy in hindsight to say I might have de-risked more here, but then when it takes out, sort of the 50, either here or here for sure, I'm going to be selling the remainder. As far as, buying on a gap like this, we just don't chase these big gaps. And my suggestion would be, though, even if you were going to, let's say you wanted to try and get on board this name, this would be the one time I would switch over to maybe like an intraday chart and see, can you get a VCP forming there? Because sometimes on these big gaps, I've noticed that you can. And then I would just use that stop, maybe even on an intraday. Or if there's a way I'm still looking for that low risk entry point and a way to get on board. That's something rarely do, but we have done, again, a few times. But again, I'm always looking, where is there a low risk entry? Even if a market looks like it's running away, that's when I'll sort of look at the lower time frame. But again, something, very rarely. And it's funny, Bob Weissman will send me sometimes these little VCPs on the 5-minute on different charts that, they just look like textbook examples. Because he trades those sometimes. And we have a number of members that, trade on the lower time frames using the same tactics. A rule's asking about AOSL. This is a pullback buy attempted on the platform July 23rd, pullback 14% on increasing volume, pullback buys attempted on buy price of 43 is less than the previous day of 43.48. Question, is entry preempted in this stock? I'm not sure what you mean by preempted, or was this sort of, maybe a forced buy, if you will. And when we talked about this and Mark had said, look, was this ideal? No, it was a name he thought was really strong and wanted to get on board. Now it's just coming in with everything else. Again, so there's a price to pay for this. If you were to just grade this in a vacuum, and this is a good example of, Mark bought it here, I think, right here, right around that price. And I immediately pinged him saying, I think we're gonna get questions on this. Well, this would be a really good example of we should have him grade this in a month or 2 or 3. Give it a few months, then look at the entry again and give yourself an honest grade. Mark's going to be like, yeah, it was probably a sloppy buy. And yeah, even the best traders have those every now and again. The key is, they're very rare and they're in situations with a 99 relative strength. Another question from Arul on Chef. Pivot I can see is 43.18 from the July. Yeah, right here. High, the stock was bought 43.63, which is 45 cents above the pivot. It's within acceptable range. That's fine. My question is, when the price crosses the pivot, would you start buying immediately or watch for something before punching the buy order? Well, in a situation like this, yeah, I would just start buying. If I know I'm going to buy the name and it's going through the pivot, you just start buying. Now, sometimes, again, maybe you're not the only one buying. The name's a little bit spreadier. It starts to move. 1%, that's acceptable. This is where, we're saying 1 to 2%, don't pay more than 1 to 2% above the pivot. My common observation about open position, most of the time, the buy price is a bit away from the pivot rather than being close to the pivot. Well, that's probably just because some of the stocks are moving.
Right, it's next best price is what we're trying to get, and sometimes that price gets away from you.
Exactly. Bill Rahman Singing Creek, my entry on ERJ on 7:30. Well, I think this entry is okay because you got a tight little spot here. I just don't love how this volatility here is widening. You sort of have this right side. This is just sloppy. You tried to break out here, then it failed. I mean, look, it did. You got this short little retightening and a little dry up in volume. Maybe you know something about the name and are looking for a way to sort of get back on board. This is a name, we were buying here, I want to say.
Yeah.
For the
Sold it-
platform.
sold it pretty early.
Obviously sold a little early into this run. But yeah, this just isn't near as good of a right-hand side. Let's see, Christian's saying the select portfolio, you're using a fixed full position size with a variable stop loss for each trade, which means that the initial capital risk varies for each trade. The other approach is to use a fixed capital risk per trade and use the variable stop loss. And then back in implied, I'm curious to know why you use one over the other and what you see as underlying flaws embedded. Yeah. Yeah, we generally, not generally, we always use, percentage of the account rather than backing in to a dollar level for a couple of reasons. One is when you're using a fixed dollar, you're going to have a bigger issue when you use a really tight stop, especially with slippage. So let's say, for example, you got a 1% stop and you want to use equal dollar risk to something with a 4% stop, where, we'd rather say, look, let's use a 25% position size or 10%, whatever your comfortable sizing level is, and sort of average them out. Because if you get where a good example would be, let's say use a 25% position size with a really tight stop and you get slipped 1%. If you're using dollars, you took a double loss, twice as big a loss as you had anticipated. Now you could say the same thing, but if you're backing in saying, I want to risk X amount of my capital, it's much worse if you follow me on that. Meaning, like, let's say I want to risk $1,000, I lost $2,000. Where as a general rule, this is where we're using averages and saying, okay, my average stop is 3%. Well, if I go in with a huge position size, this is why you'll hear us say, we're not going to take a big position size and take it all the way to our max stop. We're going to stagger it. And this is something I used to do, by the way, when I was really just getting started trading stocks. I would back in that way. And I quickly kind of shifted, to the other way. I don't know, Brandon, you want to add color to
Well,
that?
yeah, I just feel like it's more simple and it's cleaner. So then we know, like, hey, if we want to add 50% exposure, we're gonna probably buy 2 names. Unless we want to buy halves, we can buy 4. And then, it helps, keep it, in my mind, a little bit simpler in the plan. So that way, it's like if we back into it and we have, say we have something that's got a tight stop and it's like a 50-60% position. Well, it's just a little bit harder to keep track of.
Ty's asking about when the mobile and tablet updates for charting will happen, and will it be like market search? Save that question for Monday, Ty, or email it to Bob, because obviously some of the tech updates and pushes, even Brandon and I, don't exactly know when those are happening. And in terms of the larger vision, we know, look, this is gonna, Mark's vision is really to make this, like the Bloomberg platform for active traders. So there's a lot more exciting things coming. But we're learning and seeing some of these updates in real time with the rest of you guys. And as well, we're providing input in some of these tools, but we're also learning in terms of how they're best going to help us. And I can say, at least, somebody's been on the platform for almost 15 years. Yeah, some of the changes we've seen even in the last year and what's coming is I think the best is yet to come. Let's put it that way. Daniel's asking, is there any utility in using earnings stability as a screening tool? I'm not even familiar with that. Are you, Brandon?
Not really. I mean, if you're talking about the EPS rating, I think it is some type of market surge ranking, I think, or something like that. No, we don't really use it.
Sam is saying Mark made a comment on Twitter yesterday that really hit me. He talked about not using yesterday as a reflection on your trading. I am in this category. I would like your help with FOMO. I felt terrible yesterday and want to get over that feeling. Any thoughts? Well, my first question, Sam, would be, how do you feel today?
Right. Yeah, you didn't chase yesterday.
Hopefully you didn't chase and realizing, that breaking discipline never pays. When we say things like, look, avoid FOMO and force trades and that type of stuff. And the market has this amazing ability to suck people in for all kinds of illogical reasons. So the thing you should ask yourself more is, it should bother you more to not follow your plan And until you've reinforced that versus ignoring feelings, look, we all have feelings. I'm not saying nobody here is a robot, at least not that I'm aware of yet. So, AI hasn't gone that far where we've got, people pretending to be humans in our trading room and that type of thing. We all have to manage those emotions. And the best thing, this is where a plan really helps insulate you from a lot of that, because you can sit there and go, okay, even when you lose, did I have a good plan and did I follow it? And this is, trading is really a business about losing responsibly and winning responsibly, meaning, and you're just trying to make more when you win consistently over time.
I'm not sure what tweet you're referring to that Mark made, but I'll just say this, like, if you take each day as just another step in your journey, another data point in a larger data set, that's how you should be thinking about it. Like, don't like what Mark Minervini shared in yesterday's session. Like, there's gonna be opportunity forever in the market, as far as we can see. There's always new companies coming out with new innovative ways to do things and take market share, or new products or whatever that people are gonna be buying. So you gotta be thinking about, can I continue to get better at this so that the next time a good opportunity arises, I can do really well.
And this is, and I'll just add in terms of the emotions and that kind of thing, because, everyone thinks, oh, we've done well, therefore, we must be emotionless. Right? That's ridiculous.
Yeah.
And honestly, it was some of these calls and this kind of stuff that kept me going in the early days.
Absolutely.
And guys like, not guys like Mark saying, listen, there's endless opportunity. It's not going away. So even if you're not doing well now, don't let that discourage you. That means, to Brandon's point, okay, you haven't gotten there yet. Tomorrow's a new day. There's going to be more opportunities at some point. I used to think of this way of when the market would pull back or we'd have a correction, get stopped out of things, and then there wouldn't be setups for weeks or, maybe even a few months. Oh my gosh, it's like the end of the world. No, it isn't. Like, use that time to sharpen your skills and prepare yourself, do your post-trade analysis, set your plans, for the next new ideas, and be ready. And it may sound like, we're beating the same drum, but the reality is that's what wines. Any fool can make money. Most people don't keep it.
Yeah.
Or they get into a period then, or some type of a frustrating period, then they throw in the towel and quit.
Yeah, I think self-reflection, we talked about this in the Moblin interview, if anybody watch that. Self-reflection is really what kept Mark and I going, because when the money wasn't rolling in like we all hope it will, or would, it's, hey, did we, given what we know now, would it be foolish to give up or foolish to keep going?
We're having those same conversations in our office sometimes.
Sure,
Periods where we go out, we wish we would have made more. Oh, man, how do we not do better? So always should be doing that. And this is where I've made this sports analogy. Coaching is huge.
Absolutely.
What kind of coach do you want? Yeah, I mean, jokingly, guys are at the Olympics and people are like, what does this guy need a coach for? They need coaches to keep them focused on the right things, make sure they're doing things properly. And you don't need a coach when you're winning the game, by 4 touchdowns. You need a coach when things aren't working. We're in the locker room and feel like we're getting our heads kicked in, saying, hey, block and tackle properly. Let's get a drive going, and we'll put one in the end zone. That's just how life works, guys. And that's one of the things, I found probably most valuable in the service over the years, because people say, oh, why are you still on there? Haven't you figured it all out? It's like, why not, have a really great coach in your ear reinforcing the basics and fundamentals all the time? I'm trying not to get too tangent here. So back to the stocks. INSM, question on that from Philip or Philippe, depending on the pronunciation. I bought a quarter position today. Is that an acceptable pullback buy? I'm keeping my stop tight. If you're keeping it tight, look, this is the type of buy I'd be making. If I was going to buy anything today, it'd probably be this too, because it's just holding up. So we got a stock that's, it's green or blue, depending on, color you use on a day when there's a sea of red out there. This is why these setups are really powerful. This is in its own cycle. It's almost like impervious to the general market right now. And look, you've got a little volume dry up here in terms of, the last few weeks. It tried to poke its head out the other day, quickly reversed. I think it might need a little bit more work. But if you're just trying to sort of pick it off the low, yeah, I would be using, yesterday's low or today's low as a stop and just punt it. We do have earnings coming up too, in a week, so, beware of that. Donald's saying, could either you please say if you bought DOYU when the select portfolio did? Well, we bought it in the select portfolio.
So-
You're talking about like, in another account?
No, but the select portfolio is our account.
It's our money.
That's our money, me and Marky's money, so just to
not
let
like-
everybody know, yeah, that's, that we're trading that account because that's our money, so.
Hugh is saying, could you please grade my trades? On June 27th, I bought PCBX as a pullback buy. And there've been times, say, we've taken the identical positions in some of the other names in the Minervini Select. So there'll be times where, we're putting on, bigger size, say in larger accounts as well. PCBX, June 27th, sorry, right there. Okay, so you bought the pullback buy. Went overweight the same day, took off the overweight position at the end of the day. Okay, so maybe you went overweight, maybe through the highs or something like that, or bumped the position. I think that's fine, so long as you weren't running up your average price too much, or maybe you're doing it on an intraday because it looks you're pretty short term, kicked out the overweight on the close. That looks good. Sold half on July 1, right here. July 16, 25. Okay, there. And 25th, right here. Okay. Yeah, I traded it really well. Closed the position entirely on the 30th. Right here. I'm guessing maybe it took out this level. They gave back too much. Well, what was your plan, Hugh? I think you handled this well. You got aggressive. This sell here is the one that makes the least sense to me.
Yeah.
You sold this on the first on sort of an inside day. So you sat through this kind of, it looked like, a little bit of a nasty reversal outside day. It went tight for a couple of days and then recovered. Or even if you sold some there, maybe on this bounce back, my question would be, why didn't you sort of add it back? But maybe that's what you were doing. Sort of, you got the big outside day reversal and then it, popped back up into the range. You took some off. But I think you handled this fine. Especially like if I was gonna, try and play this for a bigger move, this is exactly what I would have been doing. I would use some type of a trailing stop or set a backstop based upon the size of the position and what I'm comfortable giving back. So if you feel like you gave too much back, that's where you got to go, do your post-trade analysis and sort of reevaluate a plan for how you want to backstop maybe, those remaining portions of the position you're playing for a bigger move. Renee is saying, for what it's worth, on the opposite, I trade small and extremely quick, hit and run for 1 to 2 days. Yep, with big position sizes. By the way, you guys have saved my butt with these calls and your coaching. Huge love. Well, thanks, Renee. Love right back to you. We love having you here. You're doing a really good job. And yeah, she's also commenting. INSM is clearly in a world of its own today, which is we just covered that. Sergeant is saying, Mark, have you ever worked with a Stockbee, Pradeep Bond? I think he mentioned you were a member in the past. Is that true? Do you still use some of the tools you? I know Pradeep not real well. We actually met at the original Master Trader program, I believe.
There, yeah.
Or the year after. I think he was there. I didn't meet him. I don't think officially till the next year. Don't know him real well. Did we subscribe?
We
to
did sign up
Just
for
because
a
of his
year or
breath
something like that.
something?
Yep, it was the breath.
A number of years ago.
indicator.
Haven't talked to him for quite a while. He's a nice guy. I haven't followed a lot of their work. So don't have much more to comment there. It's not something we currently use. Eric is saying, is the select trade account a margin account? If so, if the situation presents itself, will it be used? Yeah, the position, yes to both. If it presents itself, sure. We're completely opposite scenario right now. Luke is asking about VRTX. Is it a good setup? No, it's just, there's no setup here. And, this is a name that's just kind of slowly, wedging its way higher. You could have maybe tried it, here, but it's short. There's no real pivot yet. Obviously this would have been, again, another short pivot, look good earnings. It's going into earnings right now. So I definitely wouldn't be entertaining here for any position. Gabby saying, do you ever consider, or do you consider selling part of the position if the next day a stock will change its ticker name? No. Currently own SMC, previously SMLP, however, can't sell into strength because broker doesn't show me my shares on a new ticker yet. That doesn't make a whole lot of sense to me, Gabby. If it's a new ticker, you should be seeing your position, so I would contact your broker about that or
Immediately.
yeah, immediately and see what's going on there. That's not a situation I don't think I've ever even. There have been situations where I think I've owned something in the ticker change, but not that I couldn't see my position.
Right.
Question on Costco. 5 to 732.25. Maybe that's when you, is that a good buy? You're highlighting right here. Well, that's where it's coming through the pivot. You definitely could have played it there. Look, it was under the 50, but your 50 was still in an uptrend. I don't love this supply it was running into here, but you can see, you know, this is a good example of a low cheat. You know, you've got this forming in the bottom third of this base here. And that was the only pivot you got, it just took right off. I didn't buy because my wife already had a big position in her 401k. Well, good for you, Russell, you own it. I guess playing in the longer term. Hello all, is there a location on MPA in which we can view the STEM model history? Just had my 2-year anniversary. I'm guessing that the STEM model has only been green for 8 weeks or so out of 100 green. Is that historically a normal percentage? Yeah, you know, Jason, we don't have those posted historically, I don't believe on the platform. And I don't know, has it been, say, since 22, maybe more red than prior? We didn't have the STEM model sort of prior, so yeah, probably, but you know, I think that's going to ebb and flow. Where in a year like 2020, it probably would have been green, I don't know, 70% of the time,
Right.
you know, following the lows anyway. So yeah, don't get overly obsessed again with that, versus, you know, just using that as like a little bit of an idiot light, if you will, or sort of like the oil light in your car. And just so knowing when that thing's on red, you know, max caution. And when it's on green, it doesn't mean you just throw caution to the wind, but at least it means that the environment is much more favorable. Renee saying she's been watching Burke. Yeah, me too. Obviously love the product. Any thoughts on this little pull back handle for a buy with a stop at the low today? I wouldn't, no. I would wait for this. And this is actually, I was hoping it was going to build out maybe a little more down here. It really didn't. Look, aggressive, you could have tried playing it through here. Now we're kind of in, you know, if you're saying, you know, as it turns up intraday, you know, look, I don't trade out the intraday, Renee. So if you find a setup like that, you know, a pullback buy though that would interest me is, you know, maybe we come back or come down another day or two, or maybe even tomorrow, but you get a good close, you know, and then, you know, coming back up through something like that, that might get me more interested. Or a version of that. All right. 10 more minutes here. So Garmin, we already talked about that, but someone is asking for a critique on a buy. Bought on 726 around 175. Yeah, right here. Yeah, we talked about this. Yeah, it's just short. And as I said, you know, given the environment, I like this even less. And if I'm going to play something to short, it's going to be in the highest RS situation, which this also doesn't meet that. Dan's asking about Teva. Is Teva viable now? I took some yesterday, doubled my position today. Please critique. I don't like the buy yesterday on the gap. And doubling up today doesn't make any sense to me. Where were you doubling up? I mean, it's not coming through a subsequent pivot. So, you know, as a general rule, I want to be doubling up on a position that looks to be improving. This doesn't look like that to me. And every buy has to stand on its own. So in either of these days, I wouldn't buy this name if I didn't own it. I definitely wouldn't buy it today on an inside day, sort of after this gap. Could you have bought this gap? Let's just see.
Sounds like 6.8%.
Yeah, I mean, this is an example of, you know, while this is relatively tight, yesterday was, you know, potentially a viable gap. similar to something like a GE, if you were able to get it sort of coming through the pivot. We don't even generally trade this way. We just don't like to chase or buy gaps. And only would in a really good environment.
I mean, right now, I just watch this and see if we can't get, a few days of consolidation, right where the pivot Marky Drew is. I wouldn't, to his point, not jump right into it now, but it could be viable in a few days, maybe in a week, so.
Dr. Amini is saying he's short QQQ. Can you weigh in your shorting indexes? What is the strategy? Well, as I said, if you're looking for really good advice on shorting, that is not our bag. Or our bread and butter, as far as, where are you short from? If I was short from, the highs here, I probably would have been covering some, because you're at a multiple of your risk. You're maybe shorting at the 50 as it's turning down. Again, it's, where's your stop and where are you at a multiple of your risk? That's just how, we're always thinking about that in terms of the tactics. Mike's saying, thanks, I appreciate the compliment. Jonas is asking about NOW, bought yesterday with a pullback buy with a stop on July 30th, it's about 4%. So you're saying, yeah, you're putting your stop right here. This is one I sort of have on a secondary list as well, just because it's one of these software names that's held up really well while, the semis have kind of really come under pressure. This one seems to be like maybe that, coiled spring, if you will. So it was aggressive for sure, but I like that, you're sort of staying tight on it and saying, okay, if this can just sort of go here, coming off this little pullback buy, it's creative and aggressive. Not something I would do again, given how things are acting. But I think your plan's all right, because, you're being really tight on it. Your stop here is what, 2%, 3-ish%. So that's the way to try and play something like this. See, one of John saying one of the few intraday only gap ups that seem to be working are short markets. Oh, so you're like the SQQQ or volatility in today as examples. Those don't have VCP setups. So are those ridiculous high risk gambles, or can intraday gap ups in these names be a viable trade in this environment? That's not something we ever do.
Okay.
And it feels more to me, John, like you're just looking for action, rather than, just sitting out. And as volatility increases, there will be lots of gaps that go in lots of different directions and reverse. And look, we're not volatility traders here. When volatility widens is when we start to head for the exits. Yeah, everybody's asking about RDW. Is the 8% stop too wide in an environment like this? Maybe a half position. Well, it's not even the 8% stop here. It's just, this isn't that great of a setup, in my opinion. And look, it's a lower price name, one, so you're going to have more volatility. And if you're trying to, where's the pivot here? You're going to play this, I guess, some type of what you're calling maybe a cheat, like back to this area. This is just, there's no real right side here. It's just kind of sloppy. Yeah, another question on shorting. I mean, look, we can say that for Mark if you want, but as we said, many times, shorting is something we do on occasion, but not a major profit center. And we're just looking for, good risk reward situation. Michael is asking, is that the raw performance of the MS portfolio or net after some form of interest-bearing instrument? Because the math doesn't work out. The account should be down closer to 4.75%. Well, I don't know what you mean. Does it include the interest? Yeah, we've gotten a little bit of interest.
Yeah, that account sat in cash for, I think, a couple months or something.
Months,
so we got a few $100s in interest. I think it was like 8. And listen, each day we get, I don't know, $25-$30 of interest that gets tacked on. So that's just what our broker does. It's nothing we're doing. I mean, literally, we just sit there in cash, and our broker takes care of this what do they call that? The sweep. Yeah.
Oh, let's see, David. Okay, thanks for the compliment, sir. Just a compliment. Franco's saying, Mark and Brandon have been trading for 8 years, can't afford to stick to a routine, it's hard for me to know how to order properly, especially during the week. Could you share the process you both followed? Did you use checklists when starting trading? I don't know what you mean by I can't afford to stick to a routine. And as far as our general routine is kind of in the same every single day. You know, it's look, we come in, we go over everything that's on our, you know, watch list, call those down to whatever it is we're focusing on today. And this is, you know, and even now today, it's like, those are the type of names we'll send over to Mark if they're not already on focus list for, you know, his consideration, whether or not they're gonna, you know, make the platform focus list. And we're just setting alarms and going over, you know, what do we want to potentially buy? How are the names acting? Where are stops? And, you know, it's just sort of wash, rinse, repeat. And we go throughout the day and looking at, you know, the positions, how they're acting. And then, you know, screening, you know, after the close. So that's, or, you know, toward the end of the day, if it's a slow day, yeah, it's the same every time.
Well, yeah, and the only thing I'd add is, listen, if you can't do it, like have a consistent routine like we do every day, well, make sure you can at least screen, come up with a watch list, and you know, come up with a plan of what names you want to buy. And if you have to do that, you know, sometimes at night or sometimes super early in the morning or midday, like then do it then. But just have some type of rhythm, or at least stick to some type of plan to get the basic, you know, stocks that you know, the basic, order of what you're trying to accomplish, to make sure you have a plan for the next day. I don't care if you have to do it, you know, in the middle of the night or early in the morning, and you have to you flip flop it. Like I did this early on. Like I didn't have, you know, obviously my day was consistent, but at nighttime, like, I mean, taking, you know, kids to certain, you know, activities and whatnot, like sometimes I didn't get to screen until it was super late at night. Or I'd, you know, if I was tired, I'd wait till I get up really early in the morning. So just try to find the time to do the work.
Yeah, there's a sacrifice for sure, especially if you have another job and that type of thing. And Brandon and I both been there in terms of, the sacrifice, so.
Absolutely.
Last question, we've gotten through a good chunk of them today, which is good. Mariel saying if AOSL had strong fundamentals, why set the stop loss like we did instead of holding for longer? I'll let you tackle that one first, Brandon.
Yeah, well, so yeah, Mariel, this is where price always trumps fundamentals. So, you know, this is where you always have to think risk first. Because if a stock like AOSL starts to, you know, I mean, this is selling off now. We have no idea where it could stop. And who knows, maybe the fundamentals, you know, the market's always forward looking. So we don't know how far the market is discounting the earnings into the future. So this is where you have to trade price. And, you know, if you don't have you have to have a plan with how you're gonna, you know, risk manage it. And that's where, you know, we stick to the price levels.
And listen, if the fundamental story is so good and the stock is so wonderful, it'll set up again, or it'll get most likely back into some type of an uptrend. And where people get themselves in really big trouble is, you know, instead of taking a 5, 6, 7% stop, they fall in love with this story or this stock, you know, and then it does this and they go, well, I can't sell now. And then it does this, and well, it's a bargain. And then it does that and blows up their account if they have a big position in it.
Well, and it's funny, like at post-COVID, we had a couple people reach out and, you know, wanted to talk to us about trading. And this was after the blow up, COVID in 2022. And they were holding on to some, you know, stocks that had great fundamentals like a Zoom, but was down like what, 70% or something. And they couldn't sell it. And it's like, because they were hung up on the fundamentals. And sure enough, as the fundamentals came in, to justify the price.
Yeah, and a lot of those stocks, the fundamentals did come in and they were already, you know,
Off.
60, 70, 80% off their highs.
So again, price matters trumps fundamentals every time.
Last question she asked, would you make recommendations on investing in indexes like the Russell? No, but you know, we may put on some occasional positions, you know, in an index or related ETF. I think we had the IWM on earlier in the year. Look, if this pullback, you know, in the Russell, you know, develops and you know, sort of rounds out or shapes out, you know, we might look at, you know, putting on a position like that. But we're not, you know, we're not necessarily picking one index over the other, just, you know, looking at, you know, what chart looks constructive and, you know, if there's, you know, money's, we think, rotating there. So, all right, guys, that's going to do it for now. Hope everybody has a good rest of the day. Look, keep the powder dry right now. You should probably be holding a large amount of cash at this point. And you know, sitting high and dry. You look at the market pulls back further or not, don't give in to, you know, we're gonna snap back at some point, of course, again, or like yesterday, somebody had asked, you know, I felt terrible, now I feel fine. Ignore those things, wait for the setups. There will be setups again, I promise, and to somebody who's saying out that it feels like the stem's been on red for longer than green, well, you know, that'll shift too. So, yeah, save any questions maybe we didn't get to or we missed for Monday, and look for the video this weekend, and we'll talk to you guys later.